Hello, my name is Gary Romano. I'm with the Texas Workforce Commission business coaching team, and today I wanted to talk about what FFCRA leave is. So, we're going to specifically talk today about what the leave is, how it works, and how you, as a childcare business, can claim it. So, FFCRA stands for Families First Coronavirus Relief Act, and specifically within that act, we're going to be talking about the leave provisions. So, this is intended to help small businesses and nonprofits with leave needed for COVID or COVID related issues. So, essentially, the government said a lot of small businesses, small nonprofits can't afford to give the time off that people need during COVID. So, the government is helping to kick in money to help support you for the leave that you've given or are giving, right? So, you can go back historically on this one. This includes not just you, but up to 500 employees. So for those of you who are that family care provider and you're the only person, you're a sole proprietor, this applies to you. If you're a bigger center and you have, let's say, 450 employees or a group of centers, this still applies to you. So you both can use this leave. So what this is it's about time off for COVID illness. So either you or one of your W-2 employees got COVID, you had to quarantine, and this could be an individual or it could be your entire facility if you had to close for 2 weeks to quarantine. Family care, so caring for a family member with COVID, or for home care and school for a minor child. So a child that was either in another child care facility that couldn't be there because of COVID or couldn't be on site because of school, even if it was remote school. This started in March 2020 and continues till today. So we're going to talk about how you can claim it if you haven't already for going all the way back to March 2020 if need be. But then we're also going to talk about how you can claim it moving forward as well. So now what is the benefit of this program? It's really divided into two categories. The first one is related to COVID illness or quarantine. In this case, you get up to $511 per employee per day if they had COVID or if they had to quarantine. So, for example, let's say you had an employee that was paid $600 per day, they would only get up to 511. They made less than that, like let's say they only made $300 a day, then they would get the full $300, right? And to be clear, that comes to the employer. So if it's you as the sole proprietor, the money comes to you. If you have a nonprofit, it goes to the organization. If you have a corporation, it goes to you as the owner. Now, if they were taking care of a relative with COVID, they only get 2/3 pay up to $200. So if let's say they made $300 a day, well, 2/3 of that is 200. They're good to go. They're going to get 200 a day. Let's say they made $400, 2/3 of that would put them around 300, so they would be down to 200 for the day. Now, the way it's split up is you got 10 working days from March 2020 to March 2021. So again, if you had a historical closure, let's say you had one back in December 2020, well, you can go back and get up to 10 working days for that period. There's another 10 days, and this is for each employee, that they received from April 2021 to present. So even if you had a closure tomorrow, you can use this. If you had a closure back in May, you could use this. The second category of leave is for caring for a child out of school. So this means that the school is closed when it's regularly open, even for remote school. So let's talk about that a little bit. So if, let's say you had a day off because of a storm, doesn't count, right? Because the school would normally be closed whether you were in person or not, right? Let's say your child care facility closed because of COVID and you need to be at home with your child. That would count. It would also count even if, let's say, there's remote school going on. So normally your child would be educated on site in a school, but he or she is at home having to learn remotely. That would count. So you have to be able to care for a child at home during this time because of COVID restrictions. And in this case, you can get up to two-thirds pay, up to $200 a day, for up to 10 weeks. And best of all, this can be intermittent. So what that means is, let's talk about two different ways you could use it. One provider I know had an employee who had to be home for 6 weeks with their baby, their infant, because the baby's child care provider was closed because of COVID for 6 weeks. During that time, the provider continued to pay the employee and could use this benefit to replace some of that money. Another way to do it, another provider that we worked with, every Friday was Mom's Day at home to handle homeschooling with their children. On that day, on that Friday, the organization, the child care provider, was able to recoup some of the salary, two-thirds of it, up to 200 a day, for that individual for the equivalent of 10 weeks, right? So that's 50 days worth of at-home schooling. So there's a lot of time here, and I know a lot of you were home with your children that could be recouped. And again, this is if you have W-2 employees or even if you're just a sole proprietor and it's just you. So how do you claim this money, right? We've talked about what it is. First, you're going to document the time and rate. You're going to alert the IRS to it, and then you're going to receive the funds. Let's go into each one of these in detail. So documenting the time and rate. You want to keep a payroll report if you have W-2 employees, or even if it's just you, just a simple sheet, a spreadsheet, or simple little table, even if it's handwritten, that says these were the days I took off, how many hours I needed off, and your rate of pay. And we have a guide, and I'll tell you where you can find it later, that goes into more detail about how to do this and even even has a simple sheet if you're a sole proprietor where you could record these hours and your rate. The rate is going to be your actual payroll rate. So you can't adjust it and say we're going to give them some big raise or something just for this money. If you're a sole proprietor, this is line 7 of your Schedule C. So your Schedule C on your annual taxes, you go back to the 2019 one, the 2021 and 2020. You could use that rate, and we'll talk about how you alert the IRS to it. But that's going to be your rate, is that number divided by 260 for the number of days. So next you have to alert the IRS. So now you know how much money you're supposed to get, right? You've documented the rate, the time. We know that you can get up to 10 days for COVID illness and quarantine, up to $511. You can get a day. You can get up to two-thirds of the rate a day, up to $200 for caring for a relative who's sick with COVID or a child at home. So you have all those numbers. If you have W-2 employees, these are reported on your 941, your quarterly payroll reports to the federal government. Sole proprietor, this goes on your 1040 as part of your taxes. And there's actually a feature on most tax software where you could put it in. There's also on your 1040 if you do it by hand. There's a section on tax credits that includes emergency leave under Families First and family leave under Families First. Here's the thing. You can amend either of these. So what that means is, let's say you have some W-2 employees, and again, as I mentioned earlier, you had to close back in December 2020, and you go, oh gosh, I wish I knew about this. We paid everybody, but we had to pay it out of our funds. Well, you can actually go back if you qualify and request those, and you do a 941X with your payroll company. So you'd call up your payroll company and say, I need to change my 941 filing for the fourth quarter of 2020, where December is, and I need to claim this amount for family leave. And many of the payroll companies, by the way, all you need to do is tell them who and when and say, so-and-so, Marta was out from, the first 2 weeks of August in 2020 for family leave, and they can do all the calculations for you. So it could be even easier if you have a payroll company. So definitely call your payroll company, ask them about it. But if it's historical, already happened, you can still get it. Sole proprietors, this works for you too. If you do a 1041X, which is an amendment to your 1040, or even easier, bring it to your tax preparer who did your taxes this year, or if you did them online, Most of the tax software has a little button right on the home screen that says, I need to change my tax return. Go to that tax credit section and you can amend it. I did this recently with somebody. It took us about all of 20 minutes to amend their 1040 as a sole proprietor. She got $1,500, right? That's not a bad deal. So how does that money come back to you? If you're 941, it's going to come from a check from the IRS. And what will happen is 941 goes into the IRS. They see they owe you money. They send you a check. Sole proprietors, very similar. You get a refund check. So it's instead of or in addition to your tax refund that you had for 2020, or later in the year when you do 2021, I'm sorry, in 2022 when you do your 2021 taxes, you can get it then too. So even for that amendment, so again, if you didn't do this on your 2020 taxes and you say, gosh, there's so much I could have claimed, document it, do your amendment to your taxes, and the IRS will send you a refund check. Do you need help? Here's a few places you can get it. If you go to childcare.texas.gov, there's a link to help and other resources in English and Spanish, including a guide on this particular program that you're seeing right now. Texas at ecebizcoach.org. You can email us there. Quick questions you have, requests for coaching. This is available in English or Spanish. Email us in whichever you prefer. There are Q&A webinars 5 times a week. They're available in English and Spanish on a variety of topics to help strengthen your business. You want to see those times? Go to childcare.texas.gov and you can find out what the topics are and when they're being held. Thank you.